Hi, Stephen. Good morning for you. How are you?
And it's great to be digitally in Singapore. Quite emotional for me to be connecting into Singapore. I mean, I wish I was there, but it's a thrill to be part of everything. So it's thank you for the opportunity.
No, Stephen. I think I was thinking about what kind of question I'm going to ask you, but I think let's start with some kind of a pattern you have developed now. Anytime you land to a job, there's a crisis coming, or this crisis has happened, you just land to the new job. Same happened for this new CEO job. You just landed right through the pandemic crisis. I don't know, empty offices, businesses struggling, and your famous rebranding. Please share with us the whole experience you have to go through right through the crisis.
Yeah, well, there is a bit of a pattern for sure, Mohanty. It's interesting. I came to Singapore, 23 years ago, during the Asian financial crisis. You know, back when we used to talk about tiger economies and the Thai baht had just devalued and contagion was spreading across the region. But of course, what happened? There was a tremendous V-shaped recovery in Asia. Asia became more resilient as a consequence, and that whole experience was packed with learning for all of us. And now, fast forward, here I am. I joined, what was Standard Life Aberdeen is now Aberdeen, and I was fortunate that I came in a couple of months before I officially took charge. So I had a 2-month period where I had a good handover and transition with my predecessor, Keith Skiop. I also prepared for regulatory approval. As you know, we have the senior manager regime here in the UK. But what I did is I used that time to really study the business. Now, because everyone was working from home, I had to put in an exceptional effort to be able to meet with clients virtually. We actually had a little bit of respite from lockdown in the middle of the summer, so I actually got to meet colleagues directly, and so I met colleagues, clients, of course the board, who gave me a lot of input into what was going on in the company. But what I found was, so the company already had addressed working from home digitally, which was a good thing, and my predecessor did a great job in making sure that the company could continue to function. But then I looked at the real issues, and the real issues were that two great companies had come together, or were coming together, Standard Life and Aberdeen, different companies, different legacies, different strengths, different capabilities, and we really had to accelerate to one team, one identity, one team, one tech infrastructure. And the way to bring a focus to all of that was the client focus. So what we did is we focused on client-led growth. And throughout my career, I've always found that when things look complicated or things are a puzzle, the one true north is always, why are we in business? Who buys our products and services? What do they think about us? And what are their choices, i.e. who are we competing with? So I think when thinking that way, bringing that clarity to client-led growth, and what I discovered was, I actually went to our single biggest client first of all. So we have a very large client with Phoenix Group, the UK's largest insurer. And what had happened in 2018, long before I came here, the business had decided to embark on a journey of not being a life and pensions company, but being a global asset manager, an investor. And they sold the long-term life and savings pensions business to Phoenix. But in so doing, we licensed them the name Standard Life, but we kept using it. So we were still Standard Life Aberdeen, and life inferring a life company, but our largest client was a life company. So when I went to that relationship, myself and their CEO, Andy Briggs, figured out a way to recast the relationship, simplify it. I sold the brand to him that he was exclusively licensing, and that created the path for us to have our own identity, to be Aberdeen. So now our brand doesn't advertise that it's two companies coming together. It's one team, one dream, Aberdeen. and we are a global investor, and we are doubling down and making sure that our people, process, and technology deliver great services. We're bringing clients and content together. That's the mission that we're on.
Stephen, before I get to the next question, were you worried that you picked up a new job in the wrong time?
Well, when I first came into the office and there was nobody here, I wasn't worried about infection because there was nobody here, and but I started. You know, you say to yourself, so okay, so now I'm in charge. What am I going to do? and with all of these things, you got to start breaking down the problem,
Sure.
and you got to go towards the challenge, and you talk to people who have been on the journey. And you know, I had to rely on colleagues who really understood the history, and they could explain to me the challenges and what we were working on. Now, the business already had 4 programs of transformation underway, and I knew, look, this is a moving train. It's very important that these programs are delivered cleanly. So don't mess with them. Make sure they get delivered cleanly, and you know, don't be disruptive. You know, so when things are working well, then you support them. You create the conditions where they really can be delivered. So, but to your question, absolutely, of course, you know, you're on a massive learning curve, and to add to that, yeah, I hadn't lived in the UK for 23 years. Yeah, I've lived in Singapore, Japan, Latin America, back to Singapore, then the last 5 years in the United States. Now, I did know both predecessor companies. I was fortunate that I knew Standard Life because, in fact, Citi runs the middle office. So the whole security and fund services, fund accounting, middle office is run by Citi. So I had been here through the relationship, and actually had discussions on digital and you know, accelerating digital development with Standard Life. And then I knew Aberdeen because Aberdeen had been in Asia for the last 40 years. We've got a fantastic team in Singapore. You know, we've got 500 folks that are, you know, excellent investors and investing in China A shares and smaller companies and developing sustainable investments in Asia. So I knew the 2 predecessor companies. But so the real opportunity was, let's prove that bringing them together could fulfill its potential, and that's really why I came here.
Good. This leads to a next interesting question, because this is not my question. In fact, one of our ex-colleague, Navin Suri, gave me this brilliant question, and I'll try to phrase it the way he said. You are in a very unique position, Stephen. In Citi, your business was distributing. One of the business was distributing mutual fund. You are a distributor. Now in the business, you are the manufacturer of the product. You are going to manufacture those mutual fund. I think a lot of questions start coming up. The whole unfinished agenda of end-to-end integration, how fintechs can plug in to ensure that the whole value chain get connected. You have moved up the value chain in terms of the product design. This is a huge, huge opportunity for you to fix this end-to-end connectivity, end-to-end design, for at least for once.
Yeah, you're completely right. In fact, you know, thank you to Naveen for that great question. I mean, he's got completely the right perspective on it, because clients don't think, well, this is distribution, this is manufacturing. Clients are looking for a solution, and it's simply delivered. You know, speed and simplicity. Remember in Citi, I was always, you know, speed and simplicity in all we do. And you know, I even developed, you know, if you think of the word speed, you know, I developed this thing. The S and the P was for straight through processing. The 2 E's was for end to end. Exactly Naveen's, you know, question. End to end design. You've got to do end to end design. You know, I talk about going from the customer synapses straight to our cloud. That's what you got to think, end to end. And the D was digital. If it's not digital, and if the data is not alive and analyzable and transferable, it's not the right design. So that is exactly our opportunity. Now at Citi, of course, you know, we had the fantastic opportunity where we built a powerful Citi Gold franchise, and then we found the segment in the segment, which was Citi Gold Private Client, and within that, what we did is we did use great technology to ensure that we could bring curated content. So what we did is we said, look, open architecture, curated content, it could be Schroders, it could be Aberdeen, it could be Fidelity. Now, what we have this opportunity to do in this business, there are really three pieces within this business. And to explain this, the whole business was just being run as a single entity when I arrived. But when I looked at the buying behavior, it then became clear there are three businesses. There is the global asset manager, that's the investments business. But we have an advisor business, and you think of that is a business to business platform business. So for example, here in the UK, there are 5,000 wealth management firms. So it's a long tail of competitors, and they employ 27,000 IFAs, so independent financial advisors. They use our platform. So that's what the advisor business is. So you can think of it as business to business. What we do is we help you run your business. We help you serve your client. And you borrow institutional research and content and technological scale to be able to run your business. So that's the second business. The third business is the direct to consumer business. Now, the real skill for us, what we did is we restructured to have ownership of each piece. But of course, there's a synergy across them. But I think what we've now been able to do is we've accelerated this pace of change by being aligned to buying behavior. Now, I mentioned at the very beginning, clients and content. What the clients want us to do is to solve that problem, bring it together seamlessly, make it easy for us to be able to, so that you know me as a client, you can onboard me quickly, you do a sensible and common sense financial needs analysis. So my risk and reward calibration and my life goals and all that are done in a simple way. And then allow me to understand the right solution, the right content that's going to make sure that I'm on track for my financial goals, whether they be educating my children, whether they be to ensure that I have enough money in my retirement, these types of things. So the same challenge we had at Citi of how do you bring technology to bear to the problem and use technology to make the delivery much, much more simple. And that's what we're doing. Now, we have a fantastic team here. We just completed a migration to a single investments platform. So if you think about it, $700 billion of equities, fixed income, multi-asset, private markets, now all running on a single investment platform. Now, that doesn't signal the end. What we've been saying, that's the beginning of the race. Now we're in the race we want to be in. The first part was simply to ensure that am I still broadcasting? My screen's gone blank.
You're okay, Stephen.
I'm okay, yeah?
Yes.
Okay. So, sorry, my screen just went blank for a flicker there. Sorry about that. So the first stage, if you like, the heavy stage of the race was to get to a unified structure. But the real race we're in now is this two-speed architecture. Companies that really understand how to do this, they decouple the legacy and the heavy from the front, the experience that clients get. So we absolutely have done that. So we have, if you read the McKinsey reports about how do you successfully do these things, well, O and T, you'll remember it said operations and technology should be together. In fact, then you create the Scrum effect where you get product, design, risk, compliance, and operations and technology delivery together. We have that. And then you have this two-speed architecture where you're using your APIs and connecting into your ecosystem. The distribution piece is actually very important for us, and it was an area where we were weak. So you may have seen we've actually just done a thing with Citi and Invest Cloud, where we are on the Citi digital wealth platform in Asia, and we will be in the States too. And that's addressing what was a weakness for us. We weren't really accessing what's called the wholesale opportunity. It's kind of old-fashioned language, you know, the sort of classic asset management, institutional wholesale. Let's talk real customers. We weren't getting access to real customers by using technology properly, and that's why we've done that with Citi. That's why we're working with InvestCloud, and you'll see us doing more of this, where we expose the company and we distribute more widely using you know, a lot of the techniques that I learned, and I was very fortunate to learn when I was at Citi.
You know, Stephen, this is one thing I do to the CEOs. I put them on a spot when it comes to FinTech. I tell them, look, that one of the challenges FinTech face, they have a wide range of solutions, but when they go to big companies, they are put on a long queue of proof of concepts. They never really get a real customer to work with. I hope I'm going to send a bunch of FinTechs who can solve your processes, digitization. Please don't put them on a POC line and a POC queue. Get them some real opportunity.
Well, I'll tell you the truth, as I always do. We're still too slow. We are bureaucratic, and the good thing is we know that, because if you don't know it, you're not going to solve it. So we're absolutely crystal clear on simplifying the way we operate, speeding things up, and we are working with you know, we talk about this term, and it's not PowerPoint. The new world, the 21st century, is ecosystem orchestration. Now, you and I know that is about computers talking to computers, using common protocols, doing things in real time, not batch processing. It's, you know, creating the companies like a sensory system. That's the vision, that's the goal. So we're embracing that goal, and we're getting faster, every day a better way. But we need this ecosystem. Sure. We need these friends who are better than us.
I'm going to send them, but good to have a CEO who has an engineering background. At least he understands the pain of not getting things sorted out. Well, now getting to a very serious question, Stephen. This is personally, I've been working on this space for last couple of years. You know, the whole huge pension gap, and with the changing demographic and the retirement ages are going, people are living longer, and there are impact due to pandemic, unstructured labor force. This problem seems to be growing bigger and bigger, and it seems to me that the asset managers are struggling to put a product in market which can address this pension gap. I think we got to find a way how to solve it. Any views? What's your thoughts in this? What are your thoughts in this space?
Well, first of all, it is a huge challenge. It's a huge problem. I mean, the latest numbers, if you look at the numbers, it's right now the global pension gap is $70 trillion. I mean, it's absolutely incredible when you think about it. And it's forecast to grow to about 400 trillion by the middle of the 21st century. So it's a gigantic problem. Now it's going to require the very best of all of us to address it. Now, if you start breaking the problem down, so there's an information gap. That's first of all. So we're describing this large issue, but the actual individual customers, many customers don't understand. They don't have the information that tells them, what does that mean to me? What is my slice of the 70 trillion? What gap do I have? Now, in the UK, for example, that gap is that there's about a £10,000 a year deficiency gap at an individual level that is accumulating the UK's share of that. You take the UK's £10,000 savings gap per year at an individual level, extrapolate that gets to about £350 billion is the UK's share of this. So think about $500 billion in the UK's share. The UK is not that big a place, 65 million people, a small island in the North Atlantic. But then you take the US and you take Europe and you take the overall challenges that we have in Asia. A real clarion call for me that this was a real issue was when I saw what Australia did. Now, you and I know that Australia is held up as a paragon of having the super program, the superannuation program, one of the best funded pension systems in the world. And Australia decided they had to go from a 9.5% gross contribution to a 12% gross contribution. And that told me the problem is real. because a very informed country is addressing it with a material change. Now, Singapore, and we shouldn't forget Singapore. Singapore does a fantastic job of it, but it addresses different parts of it. It addresses the medical issue. It addresses the work fare issue for lower wage employees, as well as the whole pension construct itself. Does an excellent job. Now, I mentioned the information gap. Break the problem down. There's an information gap. Increasing longevity. This is kind of, it's kind of obvious. Longevity has gone from about 67 years globally to almost 75. So people are living longer, going to need more money. The third thing, and you touched on it, the changing patterns of employment. Now, the UK back in 2012 did auto enrollment. So it said every employer has to automatically enroll. But then what has happened is many employees are in short-term contracts. There's a gig economy, and they have whole periods of their lives where they're not auto-enrolled. They're not accumulating savings. So the changing pattern of employment demonstrates that we need much more flexible and travel with you pension constructs that are on your phone. The one thing that will go with you to your new job is your phone. And you should be able to know where your pot is, and you should know whether you're on track. So this starts to say, look, you've got to, how does the problem get solved? People need to start earlier. They need to save more. They need to make sure there are no continuity gaps throughout their employment. And they need to have a clear sense as to whether they're on track. I.e., not just how am I saving, but how are my investments doing? How are they likely to do? And we're addressing this. So we just launched for Phoenix. So Phoenix are $200 billion pounds client, 4 million pensioners there in the standard life pensions, and we just developed a sustainable, tax efficient, sustainable fund for them as a DC default, as a defined contribution default fund. And that starts to say, that makes sure that today's clients who are early stage in their career are invested in the companies, the technologies, and the patterns that will win in the 21st century. That's why it's a sustainable fund. And so if you think about the circular economy, if you think about electrification, in fact, I was just on, I was on with our Singapore team yesterday because we've launched this, Asia Sustainable Development Fund, and I was on with David Smith, runs a great team, and we were exploring exactly this. So you say, okay, you're developing a sustainable fund. I wanted to know, in our Asia Sustainable Development Fund, which companies are we investing in? I know a lot of these companies. So I wanted to know which companies we're investing in. What is our view on electrification? Because you say, well, electrification is a big topic, but which spots are we participating in? So you say, well, you could be in electric vehicles. You could be in batteries. You could be in power distribution systems and storage systems. You could be in the software, integrators for that space. And I went through with our team, and
I think we lost Stephen.
The company that is being, it's valued as a chemical company, but it's a world leader in batteries. And as a consequence, that's one of the funds, one of the companies, one of the components in that fund. So right to the beginning of your question, it's a huge challenge. It's a huge problem. We need to act to bring the right content to our customers, and we got to solve the information gap and the content gap.
Okay, well, Stephen, I think we may have a little visual problem, but we can still hear you. While you're getting your visuals up, let me ask you a very quick question on your career, because we may have running out of time before you get some questions from our listeners. I had a long question on your career, because your career is you have such an amazing run, and we have seen it while in Citi. There's one question I'll ask you, and please give us a very candid response. Every time you got a new job, were you ready for the job? You thought you could do it, or you figured out as you got the job?
Well, it's definitely the latter. I mean, there's no doubt about it. You know, Jackie's laughing. You know, and she was running the cards business in Singapore, and probably remembers a lot of my dumb questions. And the thing that you have to recognize, people have said to me many times, you should promote people who have got the attitude and the capability for learning, but are not actually the finished product yet. And that's when you're really going to create the right environment for talent. People can say, wow, you know, Stephen get that job. I think I can get that job next. And that sends a fantastic message. That, you know, you get a ripple effect of, you know, motivation and enthusiasm. So absolutely was not ready. And that's a great example of a system that is placing bets on talent. Now, it's about learning velocity, isn't it? I mean, it's about, you know, so you're not ready. You have to know you're not ready, which means you really work hard.
Yes.
And you really try and learn.
Yes.
And you ask the dumb questions, and then you make sure you get the answers. And I would encourage everybody to do that. Stay humble.
I'm going through it, Stephen nowadays. Well, Stephen, I think we have a couple of minutes left. Well, I'm going to bring a couple of our listeners. In fact, we have more than 5,000 people watching this as we speak. I'm going to bring an ex-colleague of ours to live on this call, Jacqueline Tan. I hope you recognize her. Hi, Jacqueline.
Hey, Jackie. Yeah, she looks exactly the same.
Thank you. Hi, Stephen.
Hi, Jackie.
Hi, Jackie.
Hi. So it's great.
Any question for Stephen?
Yes, I do. And if you indulge me. So it's great seeing you and hearing from you again, Stephen. And thank you for the very inspiring sharing. I think the last time we spoke was more than 6 years ago. And I have to thank Sopnendu and the SFF team for giving us this opportunity. I have two questions for you, if you will indulge me. The first, and one is more lighthearted question. So the first question I have is that with some of the global banks that have exited certain markets and focused on core markets as their go-forward strategy. So for example, HSBC exiting the retail banking business in the US, or even Citi exiting the 13 markets. What are your thoughts on the role of global retail banks and how it would impact the banking landscape going forward? So that will be my first question. My second question, which is a little bit more lighthearted, I remember you love to read, and you used to be the keynote speaker in a lot of the conferences. You would bring a book along of what you read for the day to share with the leaders. My question simply is, what are you reading now that you could share with us that could inspire a lot of the people on this call today? Thank you.
Well, thank you, Jackie. It's really great to see you again and great to hear from you. So the first question, yeah, you know, a bit disappointed, you know, when I see, you know, the retrenching, you know. So on the one hand, you know, I get the need to always let's focus on core markets, but the real opportunity to be able to make services pervasive, to be able to allow digital services to flow. If you have an iconic brand, that is incredibly powerful. You know, HSBC or Citi, you know, take the Citi went out to Asia in 1902. And as a consequence, you know, the Flower Flag Bank, you know, as it's called in China, has that iconic brand has got reach. So I think that the challenge for the team at Citi, and you know, they've got a fantastic team, and most of them were part of my team. Their challenge is to make sure that we allow that brand to still thrive and use technology and delivery for the 21st century. And that's why the Citi Digital Wealth Planner, and that's actually why I'm involved in it with Citi. I think that the opportunity is to continue to be present across borders. Now, yes, the very local retail banking business is changing dramatically, and the local banks are much better today than they were, at any time in the past, 20, 25 years ago, even 10 years ago. So I can see why these decisions are being taken, but I hope that the strategy continues to prevail to keep the reach and the connectivity, and don't lose that equity that exists in the brand and in the trust in the brand. So it's the first question. Second question. So yes, so right now I'm reading Atomic Habits by James Clear. So Atomic Habits is about those tiny little changes that you can make that make a huge cumulative difference to your life. And you could talk about it as pension saving, or you could talk about doing 10 press ups every morning. So if you do 10 press ups every morning, at the end of the year, you're going to have you'll have done 3,650 press ups, and you're going to be in better shape. And that's actually what the book's about. Atomic Habits. It's about finding these little habits, these little changes you can make. And he shares all of these techniques about habit stacking. So, we all get things we like to do. So, you go and you put your gym shoes next to the thing you like to do, and you do stacking and techniques and the cumulative benefit of improving our habits. That's what I'm reading at the moment.
Stephen, I think Jacqueline, you stay online. We get one more very talented leader joining us. You stay online, Jacqueline. Her name is Parul Khanna. She is co-founder of a very, very inspirational startup. Parul, here is Stephen. Question for you. Question for Stephen.
Hey, Parul, lovely to see you.
Thank you, Sopnendu, and a pleasure to meet you here, Stephen, and Jacqueline as well. I actually wanted to stay with the question of the gig workers that you mentioned earlier. It is a space that is buzzing. They're an emerging market. They're aspirational. Yet pensions, just with the topic of pensions, they don't get regular pensions, and even for large financial institutions to reach out to them, given their income is not the same or uniform. They're intermittent in their jobs, they're highly portable. But yet how do financial institutions like yours then help these people who desperately need higher real returns? They need expert management and certainly good governance.
Yeah, fantastic question, Parul. In fact, I looked at Pinbox. I looked at your digital offering, and it looks fantastic. I mean, you're doing a wonderful thing, and you're using technology in the right way. So I'm very impressed by that. What we're doing is, I mentioned the Sustainable Development Funds that we've launched, but we're actually working on something right now, and we're working with the UK government on it. It's called LTAF. It's the Long-Term Asset Fund, and it's exactly to address the problem that you just raised. So the thing is, an institution, the Stanford Endowment Fund, for example, or IBM's pension fund, they have the ability to invest patient capital. So they get access to private markets, they get access to the additional return of the fact that they can wait for their money later. But somebody, at the start of their career that doesn't earn a lot of money just cannot get access to that because it's illiquid and it's a sort of privileged access thing. LTAF is designed to solve that. So what we're doing is we're developing a fund that ensures that the fund contains the right level of private markets, alternatives, infrastructure, real estate, but has explicitly addressed the liquidity requirements of the smaller investor. And this needs to be done at a governmental and it has to be a regulated thing so that you don't get the sort of bad practices. We saw the Woodford case in the UK, for example, where there was illiquidity and people didn't realize that there was illiquidity. So the way to do this is to design from the beginning and to be crystal clear about what a fund contains and why it contains those better, longer term, risk reward premia type products. So we're working on it. We don't yet have that solved, but we are addressing, I think I'm addressing exactly the problem that you raised, Parul.
Look, Parul, reach out to Steven after this call and get in touch with him. With that, we're coming to the end of the show, and we will see you, Steven, again in November at the Singapore FinTech Festival. Till that time, best of luck and have a great time. Bye-bye.